Second day in a row, we're starting pretty deep in the red. Can we battle back once again? I don't know. Going to be a little bit tougher. Triple D has a filter. It has 1,000 stocks in it. 12 are up. How many are in your portfolio? And let's guess what sector they're in. Eric Krull at 8:35 to discuss the IPO market or lack of IPO market. We got to talk the airline industry. It's a Wednesday. It's pre-market prep.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
All right, good morning, traders and investors. We're down 20 and a half handles, 44.78. Just could not do anything off that opening bell and at 6 p.m. and banging on our 4-day low. So we'll keep an eye on this current low at 47.68.75. The buck over 103, that's up a couple pennies, 103.14. Let's call the bonds flat at 121. Crude can't hold a rally, down $1.61 at 70.79. Gold slipping back towards 2K, down 40 cents at 20.29.80. Silver under 23, down 14.8 cents at 22.94. And Bitcoin, well, we are a ways away from that high. Bitcoin futures down $540 at 42,755. Triple D was there an 8 a.m. sell program in here? We just lost a couple handles. How you feeling, buddy? How you doing?
Same thing. Just I think this is going to be the forever flu bug here. I'm okay. I'm fighting through it, but congested. I don't feel like my heart's giving out here anymore. So which is good news. So we're coming. But it's going to be a long battle. This flu bug. This one's just been a bad one.
All right, let's bring in AB. AB here. Good morning to you, AB, live from the Motor City there. How are things in the... Did you get some ice skating in this morning?
I did not. A little too cold for that. Wind chill of about negative 15 degrees. By the time I walked the 20 seconds out to my car and got in my car, I mean, it took about the whole drive in for my hands to thaw out. So I don't think I would have lasted long on the ice rink.
Okay. Should we start with the turbulence in the airline industry?
Let's do that. I mean, the airlines, they usually know how to deal with turbulence, but I don't know if Spirit Airlines, ticker SAVE, SAVE, is going to be able to tolerate this type of turbulence. Stock closed down more than 40% yesterday after a U.S. federal judge nixed the SAVE and JetBlue merger. JetBlue was set to take over Spirit Airlines for $3.8 billion. Now, yesterday, before this drop, Spirit was trading at about a $1.5 billion market cap. So if you were looking at that, you kind of had a feeling, okay, the market isn't that bullish on this deal going through, because typically if a merger is expected or an acquisition is expected to pass, you'll see it trading closer to around, 10% of that buyout price, not 50%, not half of it. So a lot of people, it looked like, expected this thing not to go through. But some people probably were still holding the stock, hoping this thing would go through. People got out of it quickly. You had an analyst note saying that Spirit might not be able to make it. Spirit might be going under now after this deal was closed off.
Yeah.
I don't know. I mean, look, I'll be honest, guys. I do fly Spirit sometimes. I mean, the ticket prices, you just can't beat them. But I mean, I would not be. I might buy a Spirit ticket here and there, but I would not be buying the Spirit stock down here.
Oh man, are they going under? I mean, that's the way the market's acting right now, Dennis.
Yeah, I think so. And I think the market probably knows something here. I mean, you don't see mergers like this just collapse. And the analyst, I'm not sure who it was, but I heard CNBC talking about it, worrying about whether they are going to go under here or not. I mean, here you are, you're a regulator, you're trying to give the consumer the best prices possible. You're blocking mergers to try to, obviously stop, two companies from merging together that you believe can price fix. It's pretty much the only reason for
Mhm.
blocking these things. And you could potentially put one of the discount carriers out of business because of your blocking this merger. I mean, the market is saying that here. I've never seen a stock collapse like that, to new all-time lows. So obviously there's some concerns about Save being a going concern here going forward. It's down another $1.70. I don't know what to say. If the merger is truly dead, and it looks like it is, it doesn't look like the stock is.
No
The way
one
it's
wants it.
trading, it looks like it may not survive. It's what it looks like. It's crazy.
Yeah, this
Hasn't
was
Go ahead. I'm just well. The only thing I was going to say was that I kind of thought this thing was kind of like in limbo already. I
It's been in
mean,
limbo for a long time.
yeah,
Obviously, they thought that there was still a chance it was going to go through at a discount price or something, but the flat out block here has people concerned that Save is. I, I'm kind of flabbergasted, to be honest, because you'd think a lot of this was priced in. I mean, this was years in the making of or not making this merger. $15.52, and then yesterday intraday announced officially deal is dead, and the stock falls 50%. They have to halt it because news comes out intraday, and you get a little bit of a bounce towards the afternoon, holds up, gives all of that back here now. I mean, $6 is your line in the sand here, but if
yeah.
you're here now, this is nothing more than an option at this point in time. So you can't just say, well, I know Save's a good company, I know they're going to be there. We don't know anything. We know we've had lots of airline failures in the past. In market pricing it like it could fail here. So I think speculative capital only, you want to take a shot, and lottery, $6 lottery ticket, you can go for it, but this is definitely not safe.
not safe
But
at all. But so the analyst was coming from TD Cohen, Helene Becker. She said a couple things.
yeah,
That she expects Spirit to look for another buyer right now, but that since JetBlue made the offer for Spirit, Spirit's business has declined significantly. So that she actually sees this deal falling through as a positive for JetBlue because they were about to acquire this company that had been on the downturn since it had made the acquisition offer. But she said if Spirit is not able to find another buyer, then Chapter 11 bankruptcy could be on the table.
totally.
She said Frontier could be a name that could come back in. Frontier did make an offer for Spirit in 2022 before JetBlue came in with a bigger offer. So, I mean, but I don't know. At that point, why would the judge let the Frontier Spirit merger go
No,
through and not the JetBlue one? I don't know. I don't understand. So,
My question is this gets really ugly, and let's say we have continued deterioration in the price of SAVE. Does the judge second guess it? Do they say, well, just destroying a company or allowing a company to go into Chapter 11 sounds a lot worse than allowing a merger to go through? I mean, at a certain point, does the judge say, maybe I screwed up?
that's a good point,
no.
Dennis.
I
Because
mean, ooh,
go
You
ahead,
don't
Joel.
think so?
I mean, can they do that? I mean,
They
can
do
they
whatever they
appeal?
want.
Yeah, they can appeal.
I,
I mean,
I mean, if the alternative is bankruptcy, and I did not know this, like I haven't followed it closely enough. I did not realize that if SAV doesn't get this deal to go through, that they're in trouble. I didn't know that, but the market is telling us that. This analyst is telling us that. Market price don't lie. We say that all the time. Price don't lie. Stock goes from 15 to 6 and not bouncing. I mean, it's telling you there's problems here. So that's bottom line is as us as traders and us as investors buy good companies and reasonable valuations. When I hear about Chapter 11, these are not the companies you're looking for.
Yeah, and then I mean, to your point, Dennis. I mean, there aren't that many discount airlines out there. You have Frontier, you have Spirit, but a lot of times when you're looking at flights, like it seems like all the airlines kind of set prices around the same, and then Spirit and Frontier are actually able to undercut a little bit, and then of course they charge more for bags and whatnot, but. I mean that is important for a consumer to have those options, and if all of a
Yeah.
sudden you've only got United, Delta, Airline, and Southwest, and all their prices are like the same always, then that's not great for the consumer. So, definitely will be a story to watch. And we should, I feel like, be able to tell from price action throughout the rest of this week if the market looks like or feels like Spirit's going to be able to make it or not.
We should just talk about this Boeing real quick, and we're
Yeah,
staying on. Holy mackerel, Dennis! You were talking about 200. I took my
it's right
eye
there.
off this yesterday, and boom, down again. Kiss 200. Gonna fill the gap at 197 26. That was going back to that gap in November, but. Like we said, man, once this Boeing gets going one direction, it's hard to stop it. And wow, what a whooping that took yesterday.
Yeah, a continued whooping. It was 212 or 213 the pre-market when we were talking about it yesterday. And I'm like, it's come this far. It looks like it wants to have a date with 200. Sometimes trading's just that easy. Have your number, you're with the momentum and look at where your target is, and boom, right back down there to 200. Is this the bounce area? Well, this would be an area
Oh
where you'd
man.
think it could bounce, but this thing's got all kinds of problems going on right now. So I wasn't really saying 200 to come in here and buy it. I was saying 200 to cover in a short if you were short the thing. So it's here right now, 199.36 here in the pre-market. 180 is big too, but you'd think you're going to it's getting to a point of oversold. You think you're going to get a bounce here eventually, but I'm not trading this for a bounce because again, I just don't know what the next piece of news is coming out. What if they find more loose parts? What if something else happens? I mean, the story is still unfolding. It's hard to just be a hero and say, "Yep, this is the buy," when the story is still unfolding.
And I just wanted to go make a little bit of bigger picture here and talk about Delta here, Delta Airlines, and boy oh boy, I don't think Q4 earnings season is off to at least on the price action is off to a good start at all. I'm a little bit concerned here about the overall market. I mean, look at Delta, run up to 42. They didn't like the report, lower guidance. This thing is down $5-6 from its high just in a heartbeat. It's turned. And then the other company that had good earnings and made a new all-time high is down again. JP Morgan down a buck 22. I know the Goldman or the Morgan Stanley news didn't help it yesterday, but little bit of concern here, at least early in the price action
Yeah.
for Q4 earnings, Dennis. I mean, maybe
Yeah, and
that
again, it's
slowdown.
it's just a repeat of 2023. What we have happening here is that they are buying AI plays. NVIDIA's and AMD's both up here again this morning. Both had an awesome day
Oh
yesterday.
my, yeah.
And they're selling everything like IWM. They're selling traditional companies. They are right back to that playbook here. IWM, let's talk about that for a second here. I mean, we went the move from 160, where we had the huge support down at the end of October, to, the Fed, driving the bus here. Interest rates going to go, TLT rally. We know IWM, TLT linked completely. You can put those two charts on top of each other. Last 2 months, very close. Up to 205. So they had a 45-point move. Take off 25 would bring you back down to about the 180 level, or 188. So 50% retracement of the entire move. This awesome move we had last year would only be $8 away here now on the IWM. So it's not within striking distance, but now we can start talking about it here. I mean, that's a logical place for IWM to bounce. We're coming back down and giving away, all the Powell gains from when, obviously came out and
Yep.
said we're going to start lowering rates immediately, which obviously wasn't the case, but that's what the market interpreted it as. I mean, again, it's the same companies that we still have issues, is that higher rates have murdered the IWM and all those smaller companies. Higher rates are slowing those companies down. We know tech. We know, like we've talked about, even stocks like Apple surviving higher rates because you know what? People will find $1,500 and still 0% financing on Apple iPhones. You get, bigger ticket stuff, it gets harder. Why is Tesla separating? Well, if rates are still staying higher or potentially going higher, in the case of the TLT, rates have actually started to increase again here. We went from $101 down to 94. Are we going back to the lows at 82, 83? I don't think so. But are we, are we going straight down on rates? No. So this market is just repricing risk to a certain extent here. Until TLT starts to catch a bid, you're going to see this overall broad market and these small caps lag.
So while we're talking about rates, we should mention some kind of macro news. Yesterday, Fed Governor Christopher Waller spoke midday. and basically, expressed caution and didn't say we're not going to cut rates. He just said we're going to be cautious with this. We're not going to cut rates maybe as quickly or as rapidly as we had in the past. So it kind of spooked the markets. But to your point, Dennis, earlier, I mean, we've mentioned a few names here. I mean, NVIDIA and AMD, typically in the past, those types of high tech growth stocks get hit on rate news like that. And they didn't really, they stayed resilient. So obviously the market was, not fearful that higher rates were going to, crush AMD and NVIDIA. You can see a slight dip, but then they recovered yesterday nicely. So the overall market took a hit on this, on Waller's comments yesterday. Again, basically just saying, hey, everyone was so excited for these rate cuts. They might not be coming as quickly. If inflation stays where it's at, he said the Fed will have no reason to cut rates in the way that some people had anticipated. So kind of, I mean, if you were in the higher for longer camp, you like to hear those comments from Waller yesterday. And then, you mentioned Tesla as well, Dennis. We did have a headline on Tesla as well overnight. Lots of news with Tesla this week between what we talked about yesterday, Elon Musk wanting more shares. But going back to Waller's comments, Joel, can you see in the charts exactly when?
He was. Yeah,
it was at 11:30 a.m.
Yeah, yep. They ran it up. That's when they ran it up to right here. This is when he was making the comments, and the old noon balloon, right? You went right up to unchanged on the session. And then after he got done speaking, is when the market started to pull back. I did see on one of the Fed Watch tools that they're backing off that March rate cut right now. I think it's down. It was up over 80% probability, and now it's down to 65. Something that we were all surprised about, that they were going to do this about face in March. So, and the other comment you made, Dennis, about giving back the Powell gains. Well, IWM has the S&Ps are still holding up, but the way
And
the price
S&P is
action,
full of a lot of tech stocks
yeah.
that are very resilient. Again, the playbook when we were in a higher rate environment was buying mega cap tech because they could weather the storm. But not only that, is that we know the products that they sell are not really relatively that expensive. There's like we've talked about the iPhone, $1,500, 0% financing. People find the money for that. So there's certain things that it's almost like a consumer staple. So Apple held up well. It was a place of hiding. I want to bring this conversation back to AI, though, because we're seeing the big moves in AMD and NVIDIA. And we know AI is good for NVIDIA and AMD and Microsoft. Is AI good for the overall economy? Is AI a good thing? Because are we not going to replace a lot of blue-collar jobs if we continue to build on AI? Like, Musk is talking about having, robots doing all the monotonous tasks that so many other people, do. These are real jobs that are going to potentially be replaced in the future. That's real money that won't be spent if the consumer starts to obviously, get a little bit more strapped if they start to lose jobs. I mean, we're obviously putting the cart before the horse because jobs have been very resilient. We haven't seen anything like this in the data. But just, throwing it out there to the chat, is AI a good thing for the overall economy? I know I want to own NVIDIA. I know I want to own AMD. And I know AI is not going away. But is AI, the cause of why IWM wants to continuously lag? And does that lag continue? Like, let's just say we move into this artificial intelligence world where, like, think about the Disney Plus movie, The Creator. They just came out with that. I don't know if you saw a chance to see it, AB. But they're talking, and it's obviously gets a little bit silly, and they get into war with AI and all this stuff. But talking about just AI coming in and doing all tasks. Like here's AI doing your dishes. Here's AI taking out your garbage. Here's AI performing surgeons for doctors. Which we have a little bit with intuitive surgical already. But the difference between AI and robotics is robotics are doing exactly what they're programmed to do, where AI can figure stuff out and start changing what they're doing, not following their code specifically here. But if we do have this advancement in AI, eventually you got to think that's going to start to replace some low collar, or blue collar jobs.
Was it one of our guests that said it's not going to be AI taking someone's job? It's going to be someone using AI. I mean, I'd agree, and I think you'll see, Dennis, in certain sectors. Like I think, for example, the trucking industry, like some of these. I think you'll see those dominoes start to fall first, and it'll give us kind of some insight into what's going to, kind of reverberate throughout the rest of the economy. But what I will say, I guess, on the flip side to maybe why people shouldn't be so worried about, oh my God, everyone's going to lose their jobs. People made that same argument a number of times before. First, during the Industrial Revolution in the 1860s, people said, oh my God, these machines are coming in and going to take everyone's jobs. I mean, people wrote about that back then. And then again, 100 years later in the 1950s and 1960s, when computers first came out, said, oh my God, this is going to take everyone's jobs. What happened both times were that technology created a lot more jobs and created a lot more economic growth. So is this a different animal than computers in the 1960s or machines in the 1860s? Yes, it's completely different. But if history tells us anything, it's that technological advancements will create more jobs and help further the economy. Again, until that's not true, and maybe that's this time, I don't know. But yeah, I mean, just again, people have been kind of making those arguments for a long time, and so far hasn't panned out.
And that's why we bet on stocks and we bet on America. My argument here would be, do I want to be in the stocks that I know benefit from AI, or do I want to be in stocks that I think will eventually benefit from AI, as in like IWM being a lot of smaller companies that don't have direct, benefit, but maybe eventually, they can take part in, AI and then get more efficient and then start to make more money in those ways. I just think we're having separation here again. I don't know if this separation is going to go away. I know Tom Lee has said IWM and small caps are going to have a catch up year. Ryan Dietrich has said the same thing. IWM is going to have a catch up year. I own some IWM in my long term portfolio. I lightened up.
You did. You had a good sale
reallocate.
There. Yep.
I lightened up because I felt like, in the end of December, one, we had gone too far too fast, but I just wanted to reallocate into more AI pure plays, and that's why I bought more NVIDIA, and that's why I bought at AMD previously. I bought SMCI. I was trying, I was talking about buying Marvell, which I never did, but I just think that this economy is going to get driven so much that I'm just scared some of the small caps get left behind again.
Well, Dennis, you did mention Tesla and Elon Musk. I mean, obviously trying to be big players in this AI space. We did have some news with Tesla overnight. More price cuts. Tesla slashed car prices across Europe, and this comes a week after similar cuts in China. I mean, look, like, when they cut prices in China, I think some Tesla bulls could try to kind of shrug that off and say, hey, well, China's super weak right now. You've got increased competition from all these other Chinese names like Boyd. But when they're cutting prices across the world, I mean, that can't be a good sign for A, Tesla, and B, just EV demand in general. Stock trading lower this morning, but not by too much. Joel, how are we looking?
Down $4, 15.91. Had a good turnaround day yesterday. Didn't quite get to that low at the 211 area, I believe, 211.61. So a little bit of a check back. Well, got pretty close, 212. So if you're looking at a swing trade here or something like that, you got two lows in the same area. Lean on that. Under that, it looks like 200 could be written on this thing. Market certainly not helping it today as well. Big component of the S&P, and you got to respect that close now at 1991 after that nice rebound yesterday. That actually broke a 4-day losing streak, one up day. Let's see if they can go back to back. But right now, Tesla's starting out in the hole.
212, yesterday's low. Let's see what it does there. Can it put in a double bottom? I think it tests it. Does it hold is the question. You never want price cuts. I mean, we've got issues here with demand. If they're doing price cuts, it's telling me demand is softening.
Low. Yep.
And it's predictable that demand's going to soften. We've been talking about this. Higher ticket stuff is going to have trouble finding more buyers in 2024. It's the financing rates. I mean, again, some of the auto companies are working, and trying to, help out and trying to get these these financing rates down to 5-6% here again. But
It's still high.
it's difficult in a higher rate environment. People are not just swimming in cash anymore. They're not just like, oh, 0% financing. Why wouldn't I own a new car? No, it's 7% financing on some of these cars, 8%, 10%, depending on your credit. I mean, that's an issue for going out and buying a new car. Even myself, I'm like, I could afford a new car, but you know what? Do I want to pay 7, 8, 9% financing on it? No. And then again, the sticker price of these things, like, where we were buying in Canada, Canadian prices, but I bought my 2017 F-150. I think I paid $62,000 Canadian. And it's a nice truck. Laredo, nice truck, leather interior. I think that truck's almost $100,000 now.
Really?
So yeah, so Canadian. So
Right.
you
No,
knock
it's
off
still
30%. But you think about, like, do you want to pay 75,000 for a truck US? You want to go and like buy a brand new truck, or do you want to just drive that a little bit farther? I'm like, I'm gonna drive mine just a little bit more. Drive it for an extra couple of years, try to get the money back on that end, because I don't feel like going and buying $100,000 truck. So I think there's an issue. And I look at the Ford dealership, and this is why I think the recent rallies in General Motors and Ford are a gift. I look at that Ford dealership. There are so many cars on the lot, so many trucks. Like they were saying before, supply issues, you can't get a truck a year and a half ago, 2 years ago. That is not the case anymore. There's got to be 50 trucks in the lot, the local lot. Like it's just littered with trucks. So that makes me not really, concerned that I'm like, I better go buy one now because there won't be one there tomorrow. No, there's a whole pile to choose from there. Now, if my truck breaks down, I blow a tranny, I start dumping money into it, maybe it's a different story. But, it's just not in the environment where people are just swimming in cash and gonna go buy new vehicles. So this is the one ticket that I think really gets hurt in 2024. I think auto demand, I think really slows.
Do you know when the best time to buy a new car is, like on a timing basis? At the end of the month, because the guys want to make their quotas and stuff, and that's when you can
They
get the
try to
good
do
deal.
deals. They're
Yeah,
trying to
they
push
try to do
deals.
deals at the
But,
end of the
you've
month.
got to be in the buying market here. Like
Yeah.
normally I replace my truck every 5 to 6 years. 'Cause I like driving a new vehicle. And 0% financing is, a pretty solid option. But when it's financing is 7, 8% here, I'm like, no, I don't feel like it. That's your market return. Your long-term market return, folks, is 8.2%. That's what the market has averaged over like the last 100 years. It's not 20, it's not 40, it's not 80 like the NASDAQ or whatever the hell it did last year, the Qs. It's 8%. So, I mean, when you're going to financing your car at 8%, you might as well just give up your entire market return on that amount of money. So I think I'd rather just have the money in the market here and try to like work that or in some type of, vehicle, some type of, even cash. But I just can't stomach paying 8%. We have retail sales coming here in a minute.
Yep. Well, we got retail. So we got a lot of economic data this morning, but I think retail sales will be the biggest number. I'll read that here in a minute. Speaking of economic data, overnight in China, GDP came in, missed estimates. GDP for the last 3 months of 2023 rose by 5.2%. That's below the 5.3% growth forecast. I mean, like, honestly, 5.2% growth in Q4 for China, that doesn't sound that bad. I mean, when
awesome.
Right. Like you expect, like you look at these Chinese names, you look how people are writing the headlines about China, and you would have thought that the GDP was negative 5%, but it was 5.2%, but it still missed estimates. They started posting youth unemployment
I think
data
we got
again.
some weak numbers.
On retail sales.
Yeah, let's see another leg down here. Another hard leg down. Waiting on the retail sales. Pre-market low 68.75.
Retail sales came in. Let's see. Core retail sales in December up 0.4% versus 0.2% estimates. So actually came in hotter. Hot. So that's probably, not good for inflation worries and rate worries. U.S. export price index was negative 0.9% versus 0.6%. I don't know how much we care about the export or import price index. But either way, retail sales coming in a little hot. So Joel, you think that's the market saying worried about inflation?
I mean, I with the way the bad news is good news and good news is bad news here, they don't like this number because this just says that we're still humming along. that what Powell gave us with the rate cuts. I think this is even going to move the March lower percentage on the March rate cut and push it out to June. I mean, people are still spending, and you would think so. This is for December, right? So people were still spending. They were still getting those Christmas presents. I think wait till we see maybe the February number, because maybe people tapped out at Christmas and spent the money. But right now, just I think just the tone, just the overall market tone has really changed here. And really, I mean, selling rips right here is I think is going to be your best strategy here. Not only through Q4 earnings season here, it just seems like we're just hanging on. And if you use the IWM for any kind of an indicator here, I mean, that had Dennis. I remember when you sold that, and I was looking or sold that portion. I was looking at the 50% retracement from that 2021 high. That was like at the 204 area. And we got up to what? Almost to 205. I mean, that was just a textbook move here. Whereas the S&P, it's still just, still kind of hanging in here. I mean, that chart looks a lot different, as you said, Des, because of the tech, the big tech component to it here. But it seems like just the momentum, we really have lost the upward momentum.
It's just separation here happening again. And I'm going to keep saying the 2023 playbook is coming back here. And it's basically, if you don't have a direct play on AI, the market is not interested. If you do have a direct play on AI, the market is so interested. I mean, look at the stocks making new 52-week highs yesterday. NVIDIA, Microsoft, AMD. These are stocks that are talked non-stop on CNBC about AI, non-stop. People hate NVIDIA. They absolutely hate this stock because they're like, it's so overvalued. It's going to crash down to $100 or to $200. They're wrong, man. It's not. It's in my Nassau trade. The valuation, people can argue all these valuation metrics that they want. The valuation is not actually that crazy here. And we talked about it, 26, 27, 28 times earnings. AMD's stretched. It's almost 50 times forward earnings here now. When we bought it back at 95, it was trading 28, 29 times earnings, and I thought it was reasonable. It's starting to get to, stretched. But with that being said, we saw what happened with NVIDIA's earnings, how they started to grow. AMD hasn't had this huge increase in their forecasts yet. So if AMD starts to, pull in NVIDIA and starts to increase guidance and raise guidance, it's not absurd to think that AMD could grow into this valuation here too. So, I mean, if you want to participate in AI, you're not going to get these AI plays for 10 times earnings. It's not going to happen. You know what you get for 10 times earnings? No AI. You know what else you get for 10 times earnings? A lot of companies laden with debt. A lot of companies that are sitting here, and they got some decent dividends, but, what you get is just, usually declining growth or no growth. So if you want growth in this market environment, you're going to have to pay for it. I'm not saying you should chase here, but I'm saying when you get pullbacks on these companies that are going to benefit from AI, it's probably a good idea to have a shopping list ready.
Okay, S&P's getting a little bounce here. We're still in the red by 22.5 handles, but time to talk the IPO market. And who would be better to talk that with? Is Eric Krull. He's the co-author of The Life Cycle Trade. Good morning to you, Eric. I saw you in the background there, smiling and stuff. Or are we a little bit too melodramatic today about the markets, or just give us your overall feel? I mean, you're a market veteran here, and man, what a run we had at the end of 2022. Before we get to the IPO market, yeah, I know you're active in investing. How you feel about the market up here?
Well, after a 9-week in a row rally after the November 1st kind of like follow-through day, it's been a great market for a while. And then now I don't like the way the IWM is going, the small caps. That's not good. That it's nice to see some industrial stocks doing well, but even those are taking a pause. Like Dennis was saying just recently, if it's not AI, no one seems to be interested. And following up with what Dennis was talking about, I'm less worried about the blue collar jobs going away with AI because when I think about blue collar jobs, I think about people working with their hands. I think about plumbers, carpenters, those kind of things. I don't see that being taken over by AI. Maybe they'll use AI to help diagnose a problem. I see more white collar jobs going away, knowledge workers, that kind of a thing. I'm also thrilled by the fact that from what I've read in the past, they train AI to look at like oncology reports, and they look at x-rays and they look at MRIs, and they can find cancer better than the best doctors. So those are the good things. I don't see that. I don't really see blue collar jobs going away too much, though.
Are
Yeah,
you a
that's gonna.
believer, Eric, in the AI movement? Are you a believer in the NVIDIAs and the AMDs? The relentless, I know valuation's scary, but are you a believer that this AI is here to stay and coming and obviously maybe coming for your white collar jobs? A great point you're making, by the way. Do you think the separation that we're getting between the IWM and the Qs continues? Or does eventually, everything just get bought if we really, like get in this AI? And AI is just good for everything. Thoughts going forward? Are we still going to stay in the stock pickers environment here? And should we be, looking at AI on pullbacks, or should we be staying away?
I think, AI is definitely here to stay. I also think the valuations always get frothy when something new comes out. Remember the PE ratios of Amazon, Yahoo, and Google way back when, and they tend to grow into it for the winners. There's going to be losers, of course, and not always the first movers end up being the ones that win. Like, remember, what spreadsheet did you use first? Maybe it was Lotus 123. Who uses that? We all used WordPerfect, and then we use something else, and then we use Word, and then we use Excel, and we can go through all the examples. Who was the Motorola had the Razor phone? Who has any of those anymore? So we'll see some AI for movers and leaders, and then maybe they'll be taken over by someone else who has a better idea. But it's always rough to buy stocks with high PEs like AI, but I would definitely buy in the pullbacks. But I'm really hoping for the market to broaden out again. I don't think the AI stocks can carry us forward without the overall market. We haven't talked about financials yet this morning, but I did not like how financials reacted to this earnings report.
Yeah.
And I was really happy to see like the middle market banks and regional banks moving up from November 1st through the end of the year. And now they're starting to come back. And that was like the canary in the coal mine last year when the regional banks had trouble. And then we had, 2 or 3 bank failures that really hurt the market. So I want to see the market broaden out and certainly keep watching AI. And I would buy them on the pullbacks.
Well, one thing that could help the market broaden out, Eric, I guess, is new companies coming to the market. What are we seeing this year in terms of IPOs? What are some IPOs that you've been watching, throughout the last few months?
Well, it's interesting. I had a graphic that showed how many IPOs came out last year.
Yeah,
And
let's talk about 2023 here for a second, Aaron. Before we go into 2024, it was a slow year, huh?
It was a very slow year, the third slowest in the last 14 years, both in numbers of IPOs and in dollars raised. And if you look at the dollars raised, it was 19.4 billion. The one last year in 2022 was even worse. But then you look at 18.8 billion in 2016, and these are not inflation adjusted. So really, this was even lower than probably than 2016. So it was not as cold as Detroit was the last few days, but it was pretty slow and icy this year. In 2023 for IPOs, and 180 IPOs. A lot of them were biotechs. So it was slightly up. It was mildly better than the prior year, but it's still slow.
So let's talk, I guess, about, still looking at 2023, some of the few notable names that we had. I mean, the first one that comes to mind is Kava, of course, the, fast food Mediterranean group Kava. Have you been watching that one? What ones have you been watching?
Well, Kava is an interesting one because they are Mediterranean like Chipotle, right? That's their kind of their the short version of it. They bought out Zoe's Kitchen. Zoe's Kitchen came out public a few years ago. Didn't do so well, but as Kava, they seem to be doing well as a stock. Not great, but it's something that I watch. How far did Chipotle go from its beginning till now? And another one I'm watching is Birkenstock. I don't own positions yet in Kava or Birkenstock. I'm watching them closely. They're there's only like 9 stocks that have even made gains that trade more than $20 million a day of IPOs in the last 2 years through January 4th when I did this. And Birkenstock is one of them. Kava's right about break even from the day one close. And these are the 3 I'm watching. I'm looking at Kava Group. I always talk about IPOs move in 3 phases. You have the initial IPO advance phase, and then they go for a long time in a due diligence phase. And that's typically after they undercut their day one low. And then after a long due diligence phase of 6 months to 2 years, then they go into the institutional advance phase. And each of these 3 here are very new. Kava, I would say it just had a short, maybe 1 week advance, and that's just kind of trying to form its first base. So I would still call this the IPO advance phase. It did undercut the day one low, as did ARM Holdings. Look at that one. ARM Holdings is one I actually have a position in, and for 2 reasons why. First, it's forming this hook pattern, and that's been something we found in the past. My co-authors Eve Bobach and Kathy Donnelly and Kurt Dale have pointed out this hook pattern. And ARM Holdings also, I don't think, is really a new stock. It's been around. It was public. They went private and they came back. And guess what? It's a chip company in the AI world. That's part of why I'm watching it. So to me, it's already in an institutional advance phase because it's institutional quality. It trades $400 million a day, 20 times our minimum. It's already well known, has some big funds in it. So I'm excited about that one. And then Birkenstock doesn't trade as much as the least liquid of the 3. And it's been around a while, but it's being publicly traded just recently, and it's in the IPO advance phase and just starting. So I'm curious to see what it'll do. I don't know if it'll be as big as Decker's. If you look at a Decker stock long term, that thing went from like 40 in 2016 up to 700 something. I'm not saying it's the next Decker's, but it's shoe companies can do well.
So Eric, I mean, right now, I guess, are there any on the horizon that we're looking at that might be interesting, or do you think, we got to wait for this bear market to kind of play out before we start seeing more companies that want to go public in this space?
It usually takes about 2 years after a bear market before the IPOs start rising again, the number of them. And we'll see a few will probably test the waters. There's a company out there, Skims. One of the Kardashians is involved with it. It's fashion that looks like it's more toward the regular woman, not the supermodel thin people. And that one looks like it's getting a lot of talk. And there's a few others on the horizon that I'm just looking for. But right now, I think it's going to be cold for a while and not too many. And then maybe by mid-year, if we can get a market rally, if we can get a durable uptrend, I will be looking at more IPOs April, May, June, that time period, because the best companies come out when the market's good.
Let's talk about probably the primary reason that we're not seeing a lot of IPOs, and that just like the overall, interest rate environment, right? Companies wanting to do financing or, come public. I mean, how much do you think that what happens in the IPO market depends on what the Fed does in 2024?
You make a great point, because think about, you go back 2-3 years ago when it was 0.25% Fed funds rate, and money was free and easy, and you get all these IPOs come out because a lot of them have debt, and they're trying to finance it with all the angel investors, and you're looking at private equity, and when they start getting higher rates, private equity is not so happy to hand out money so quickly. And you're looking at biotechs. There's a lot of IPOs in the biotech area, and they make no money up front. They're always looking at a potential breakthrough product, and it's harder to get money as time goes on when you have higher rates. And the same thing with tech companies. They burn through money, and it's going to hurt. And when the Fed starts to ease rates, if they do, that'll help the IPO market.
Do you have any studies or any correlations with the IPO markets in election years?
No, I don't. I have not studied that.
Okay. All right.
Yeah.
I'm just curious. So,
What are the big
uh,
companies that are coming out this year, Eric? Do we have a list of like some names that we would all know, like who's on, our agenda this year for coming out IPO in 2024?
I had a list over here, but I'll try to find it. But it's not like a couple years ago, we were talking about Uber, and we were talking about
Yeah,
Lyft, and we were
yeah,
talking about Palantir, and there was a lot of them. There
yeah.
just aren't that many right now. And
Hmm.
there was an interesting interview with Elon Musk recently where he talked about don't go public if you don't have to. It's the public markets demand too much in terms of short-term profitability and sales growth, and he's not taken some of his companies public, the Boring Company and a few others, because he wants to just do long-term, decisions that are better for the company, he thinks, than if you go public. And there has been a fair amount of still private equity out there, and companies seem to wait longer now. They wait till they're like almost what do they call them? The unicorns. They're $1 billion market value before they even go public. So they don't go public as early as they used to. But, I'll see if I can find that list of companies. But
okay.
it's been interesting how there just haven't been that many that I
I
like.
mean, I remember hearing Discord.
Yeah,
Discord.
Reddit is another one that people have been talking about for a while. That I don't know what happened. I thought Reddit was supposed to IPO like 2 years ago. Maybe they looked at the market and said, "Nah, that water looks a little too cold for us to hop in right now."
And Discord too. For 2 years, we're talking about Discord, and I'm not sure why they won't. But to me, it's a sign of how the market's still not that great.
And to your point about companies waiting longer now, I mean, do you think that is that bad for investors? Like if you were able to buy Apple when it went public, like if Apple was going through its same growth today instead of the 80s, it probably would have waited a lot longer to go public, and maybe people wouldn't have been able to get in that early. I mean, is that a problem for everyday retail investors?
We've talked about it, me and my co-authors, about how the longer companies wait, it seems like a lot of the air is out of the balloon by the time of the IPO, meaning like the
Right.
growth is already there. They're really overvalued. They're really high valued. And if you look at, especially the last 2 years, how many stocks IPO and then just go down, and they don't just drop a little bit. They'll drop like 30, 40, 50, sometimes 70% from their day one opening price, so they finally trace a bottom and then go another 1 or 2 years, and then they start to go up. But a lot of them have dropped a ton.
And I mean, do you think part of that is that now, I mean, the goal for a lot of these private equity or VC funds is just to get to that IPO? They're not really worried or concerned about what happens after the fact. They just want to get that $1 billion valuation, dump it off on the public market, and then people go out and buy it on that IPO day. And then next thing you know, it's trading at a 30% less valuation than it was. I mean, is that how it's always been?
I wouldn't say it's always been that way, but it's certainly worse in the last 3 years, especially SPACs. The SPACs, I would put those in the category of they were happy to just announce a deal, get the money, and then run. Really, I think IPOs. There has been a large number of them that have come out in the last 2 years that have dropped, and like I showed that one slide,
Yep,
the histogram. You're looking at 75% of IPOs, that one right there, are trading below their day one closing price. Of the ones that came out in the last 2 years, 3/4 of them are at a loss from the day one close, which is a large number. It's more than normal.
Eric, before we let you go, I have one question here, and I don't know if we're going to be able to connect the dots with this or not, but because they're not true IPOs, but with in relation to Bitcoin here, and like all of a sudden, there's all these ETFs here. Now they're not IPOs; they're obviously based on the price of Bitcoin. Just from like a market structure standpoint, I mean, people are looking at, oh, now everyone put their money in Bitcoin here. I just wondered if you had any perspective on the recent IPO, or not IPOs, but the recent new offerings for Bitcoin.
I wouldn't want to comment and say like I don't think they're going to act like IPOs because it is a commodity. I
Yep.
would say this: the ETFs. I looked at there was 11 of them that came out that I've seen. The vast majority have very, very small valuations. I mean, we're talking like the top ones are 100 or 200 million, but then you
Mhm.
quickly, if you go down the list, they're 5 and 10 and 20 million market value. So I don't know. I'd be very careful because if it were an IPO, I'd say those are so lightly valued that I'd be afraid to even touch them.
Yeah. Okay. All right. We've been on the line with Eric Krull. He's the co-author of the Life Cycle Trade. He's been guiding us through the IPO market for the last few years. Really appreciate your insight, and we'll dial you up here in a couple months. Hopefully, we'll get some lower interest rates and get this IPO market heating up again. Thanks a lot, Eric.
You're
Yeah, and
welcome.
Eric, oh,
Great to
sorry.
see you guys.
Thank you
Thanks,
again.
Eric.
I'm Aaron, by the way. I think it's my first time having you on the show since I've been on here. So great to have you on. Looking forward to having you on again in the future.
Thanks, Aaron.
All right, guys. Again, that was Eric Krull from Life Cycle Trade. All right, guys. We've got about 8 minutes left. Still a few topics to discuss today. What about some any trades out there? I mean, are there any good trades for when it gets this goddamn cold? I mean, like the generator companies, the Generac. I mean, I saw yesterday natural gas actually went down because people were saying the cold is passing. Clearly, they weren't broadcasting from Detroit on CNBC when they were talking about the
It's
cold
cold.
passing, because it's. I mean, I don't know where you guys are joining from in the chat, but I'm hoping you guys are able to stay warm and everyone's heaters and everything is working, because it is brutal out there.
Brutally cold. We are full on Arctic where I'm at right now. We got about a foot of snow we've had in the last 3-4 days, and the Bay, I've been waiting for it to freeze. Well, this week I think the high this week is supposed to be 22 degrees Fahrenheit here. So you're going to see some serious freezing of the Bay here in the next 6 to 10 days. It's very cold. I mean, naturally, you think, like you said, oh yeah, well, natural gas is going to be going up, but these things are seasonal trends to a certain extent, AB, and you're like, oh well, we got the cold spell coming in, it's going to pop. They get ahead of it a little bit, and then once you like get part of the way through it seems like they do sell off, and UNG did not have a great day yesterday. I don't think that there's this like play here where I'm like, oh hey, it's getting cold, I'm going to go buy all these stocks here because it's getting cold. I don't see really that trade happen that often.
Yeah, I feel like you have to see specific. I mean, just because it's cold doesn't mean much, but like a couple years ago when you had that big storm in Texas, then you actually saw some stock implications there.
Storms matter.
Right.
Hurricane trade. We talk about this all the time. Generac is your best play on the hurricane trade. Entering hurricane season, there's a play to own some of these stocks. But it's one thing, a winter storm, with some snow. It's another thing, get a hurricane that's coming in, hot and going to do, billions of dollars in damage. It's a big difference. So hurricane trade, I would say yes. We talk about those trades all the time. I'm not a huge winter storm trade guy.
All right, Canada Goose. That really hasn't done too much off this. People, I don't know those codes. I've tried them on a few times. Those things are super warm. Dennis, we're continuing to be under pressure here. We just made after the retail sales number came down and made a new pre-market low. Are you seeing anything out there? In a balanced land, NVIDIA here has now shifted from
Yes.
red to green here. I haven't
Green to
checked
red.
AMD at giving back a couple bucks of its
We did have
earlier
an
gains.
insider sell. I haven't seen any insider sells in NVIDIA for a while, and I did note that last night.
Really? Okay.
Yeah, we had Mark Stevens selling 36,000 shares. It had been a while since I saw an NVIDIA sell. Well, actually, no. Friday, I guess Mark was selling some too. So there has been some selling up here. So not sure. I was just looking back at the pro here. There's been a couple of sales. So you're starting to see a little bit above sales. I mean, we've come a long ways. Do you want to chase NVIDIA here? I'm not a chaser. I've never been a chaser. I always wait for the pullback and the consolidation. So 500, 480 to 500 was great consolidation for NVIDIA. If you bought those levels, you're rewarded. You've now had a 14 to 15% run. Now time to digest. Maybe a little back in and fill in. Do I think we go higher in NVIDIA by the end of the year? Yes, I do. I don't think the story is going to stop. I don't think the story is cooling off even. But do I need to chase it here? Or are you going to get a shot on a pullback here? I think you'll get a pullback, healthy pullbacks, and then you're ready for it. So shopping list still. NVIDIA and AMD, I own them both, but would be on my shopping list if I didn't own any. ARM Holdings is an interesting one because we don't talk about it, but it is an AI play. It has pulled back here. I like when Eric talks. Eric, I think, is a very smart investor here, and he's looking at different patterns. It's cooled off a little bit, more. And then the chips, you're looking at all these stocks. I think that's where I'm looking. I don't think I'm looking at IWM, and I'm not looking at the banks and saying, yeah, oh yeah, gonna get me some banks. That sounds really tasty. That sounds like the story of 2024. Banks, that's what I want to own. You know why I don't want to own banks? Because these have been crappy investments for the better part of the last 15 years. They have underperformed massively. They probably continue to underperform. If you like dividends, you like your 3-4% dividends, you're older, you want to play conservative. Is there a place for banks in your long-term portfolio? Maybe. But I think that if you're an investor, a younger investor, and you're looking at saying, I want to own Bank America for the next 20 years because this is where I'm going to make all my money, I don't see the story there.
Yeah, and to your point, Dennis, I mean, you brought up Bank of America. Just I was already had the chart up to use this as an example. In 2019, in November of 2019, Bank of America's stock was trading at $33.18. 2019. We're now in 2024, a little less than 5 years later, and the stock is trading at $32, $1 below that. So in the last 4 years since that, $32 when Bank of America in 2019, the U.S. economy has grown, right? Stocks have made new all-time highs, and this stock is trading lower. So all you have to do is look at that and say, okay, the market is not rewarding these names. There's no growth here. And that would deter me from wanting to own this stock, because at any time, you brought up, okay, if a stock's trading below its COVID lows, you don't want to own it. I feel the same way about stocks that aren't trading above their pre-COVID levels. If a stock's not above where it was in 2019, 2020, before the COVID market crash, then why would I want to own it? Because the economy has grown since then. Other stocks have grown since then. Why would I want to own a stock that has had no growth for 4+ years?
And we can go further back in this, and I know maybe your charts don't go that further back, but you know where Bank America was in 2007?
Yeah, I pulled that up.
$55 a share in 2007. So here you are. What is that? 17 years later. 17 years later. If you're long term and 17 years, you're still saying, well, I'm long term. 17 years is a damn long time. That's, a fifth of a lifetime here. 17 years later, this stock is down 40%. And again, okay, you got some dividends in there. You got a 2% dividend or
They're
a
not going
3%
to do much
dividend.
for you. Yep.
I mean, these have been underperformers for a very long time. They've been value traps for a very long time. Is this the big catch-up trade? We're all going to start going into the banks and owning the banks? I don't think so. I don't think that, and I'm not saying Bitcoin's going to replace the banks. We're still going to need banks as a place for them in your economy. But this isn't the super growth engine that they used to be.
Well,
And financial crisis changed everything for me. So many stocks. Bank of America is one of the better ones. We've talked about Citigroup. Citigroup, good for you to take it back into those prices. And every once in a while, it's good to do these exercises because people get caught up on the banks and saying, how do I lose? Citigroup, 2008, $530 a share. It's $51. So in the last 17 years, you're down 90% on your money. Good investment. So I just think, why? Why try to be a hero and say this is the year for the banks? Because every single year people try to do this, and every single year it seems like they're disappointed at the end of it.
right.
I don't see the AI story here. I don't see the story to carry it higher. They said, oh, well, higher rates were going to be good for the banks. Well, that didn't materialize. Now we're going back lower. So lower rates now are supposed to be good for the banks. They're just trying to find reasons for things to be good for the banks, when the bottom line is the banks have been really crappy investments for a very long time.
Yeah, and maybe sorry, Joel, go ahead.
I'm just going to say, except for JP Morgan. I mean, there's a few out there. JP Morgan.
Best of breed. We might as well own best of breed. If you're going to own one, it might as well be JP Morgan. And Joel, that's a good point you're making. You're 10 times earnings on JP Morgan, 10 times earnings on Bank of America. Why the hell not own JP Morgan?
Yeah,
Might
well,
as
or
well
you could
invest
go
at
the
the
other way and say, why not take a stab at the regional banks? Maybe we got to get Tim Melvin on, see what his latest outlook for regional
I
banks
think
going
the
into.
regional banks problems are not past us yet, and I think they might actually come back to haunt us here yet. They're
Yeah,
still carrying a lot of crappy mortgages, just as much as the U.S. consumer has stayed resilient because they're sitting here with with their mortgages at 2.73%. The person on the other side of those are all those regional banks sitting with these crappy mortgage books that we just so happen to forget about. The problems didn't go away. They didn't all of a sudden get out of these crappy mortgage books. The problems just got forgotten. They're still sitting there on the books. They're crappy. And the rates are still high. We're now maybe coming down, and maybe, lower rates will help this problem eventually. But rates aren't going down tomorrow. So I think you're sitting here on regional banks saying, yep, these things are just fantastic companies. Are they? You're loaning money at 2.5, 2.7% for 30 years. You got to ask, maybe the management here should have been thinking a little bit more, not holding all these mortgage books. And that's why we had multiple regional banks fail. So I think these are some of the worst run companies out here. So buying good companies at reasonable valuations is the exact opposite when you're buying the regional banks, because a lot of these regional banks put a lot of good money out for a very long time at very piss poor rates.
well, I mentioned it earlier, and Dennis, it reminded me because you said value trap, and we talked about this stock being a value trap potentially, Alibaba. And I mentioned it earlier. China's economic data came in lower than expected. GDP growth of 5.2 versus 5.3 estimates. Some concerning real estate data as well. House prices in China dropped at their quickest rate in more than 9 years. But these stocks have just gotten absolutely crushed, continuing to move lower. I mean, Baba now, what are we below? What are we at? $60 on Baba?
We're
We're
approaching all-time lows on
yeah,
Alibaba, which
yeah.
is an incredible thing to say.
I mean, yeah. So these Chinese stocks just cannot catch a bid. Again, more concerning data coming out of China. But Dennis, like we said yesterday, I mean, still, or like we said earlier in the show, like 5.2% growth for the fourth quarter. It doesn't sound like the most awful thing in the world, but clearly there's some other concerning numbers in here because the market wants nothing to do with any of these names. And
the market is still just concerned on the Taiwan situation. The geopolitical risk is just simply too high. The market knows the day if China goes in and invades Taiwan, that day, the FXI isn't down 5%, it could be down 50%. And that's what the market is scared of. So, again, if you take the geopolitical risk and eliminate it somehow, I'm buying all these names. I can't eliminate that risk. I can't even quantify that risk. And that's why I stay away. And I've been telling you to stay away from China for a very long time because I
Yeah,
am
you have.
concerned. It hasn't materialized. People will say, well, you've been wrong, Dennis. China hasn't come in and invaded Taiwan. They haven't come in yet. They haven't, so you've been predicting this. You and Money Mitch were talking about China coming in, invading Taiwan last year. Never happened. So you've been wrong. Well, have I been wrong? How's your Alibaba investment doing, buddy? It was $100 then. I sold mine
Dennis,
at
you're feeling better.
$240 a share. And
I'm
everybody
going
said I was an
long.
idiot.
To Dennis calls. You are on the rebound. I am going. You are firing up, man. This is the best you've sounded in like 2 weeks.
I have to get pissed off to sound good.
Yeah, you
Love
do.
it. So I just wanted to mention that China news again because when we talked about it earlier, it was right when the U.S. retail sales were coming in, so we got derailed. But I thought we at least should mention these stocks moving this morning because this will be a big headline into the open, which is now about 25 minutes away. We're running a few minutes long. Joel, who is going to be our guest tomorrow?
Mr. Chaikin. We're going to talk to Mark Chaikin and get his view on the markets from Chaikin Analytics. But fun show today, guys. We covered a lot of stuff and hanging out on the lows of the pre-market session right near the 4-day low. See if we can catch a bid. But looks like the 2-day losing streak turning into a 3-day losing streak.
There we go. Stocks set to open lower this morning. Dennis, Joel, thank you as always. Hope you guys able to stay warm today. Dennis, Hope that
Thanks,
recovery stays on the right track. Sounds like it is.
We're trying.
We will be back tomorrow. Till then, guys, make sure to smash the like. We will be doing live trading starting up now. This stream will redirect you there. You do not need to go anywhere. Till then, stay green, and we'll see you tomorrow.